Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank using the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sarah Ibrahim. So, as an entrepreneur, I'm constantly thinking of ways to improve my business, and one being obviously through accessing financing, through accessing different loans and things like that. And I think that's overall in entrepreneurship, that's a very important thing to consider. Is you want to consider how to leverage other banks, other investors, and to grow. Even if you already have the capital, one of the ways of expanding and 10xing your goals is through leverage. It obviously takes an expertise to understand how loans work. You also have to qualify for loans, which is why I have today's special guest with us. His name is Leo Kanell. He is a serial entrepreneur, author, speaker, and business funding expert. He's the founder of Seven Figures Funding CEO Academy, and the Seven Figures Club podcast. He's the author of the Business Funding Formula and has secured funding for thousands of businesses with hundreds of millions of dollars. He believes that entrepreneurs will solve the problems of the world, not politicians. Leo and his team are dedicated to empowering entrepreneurs with affordable capital and business finance education tools that create confidence and success for business owners in all industries and business stages. He resides in Utah with his awesome wife and five amazing kids where they snowboard in the winter and wakeboard in the summer. Leo, welcome to the show.
Hey, thanks so much. Excited to be here and connect with like-minded entrepreneurs and your audience, and obviously your professionalism, Sari. So appreciate the opportunity to be on the podcast.
Yeah, thank you. Thank you for joining us. As I mentioned before we started recording, this is a subject I take very passionately. And I think it has the most impact on entrepreneurship, just being able to stay in business through financing and through leveraging loans. And obviously, business loans are one of the hardest types of loans to get. Before we jump into all that, do you mind sharing with us your background and how you got into this specific niche?
Yeah, absolutely. It was over a decade ago. I was looking to fund my first business, and I started to realize as I went down the street to my local bank where I, banked for a number of years and thought I'd built this relationship up. And I applied for financing for my business only to find out that no, I didn't have the business financials, I didn't have the collateral that they wanted. And I started to realize that most people actually don't qualify for that SBA
Mhm.
loan, especially when they're starting a new business. And so I started to do a lot of study research and categorize the different options, find out, what it takes to actually qualify for the different types of financing, and realize there's not a lot of options for startups out there. And so I started to figure out, well, what can we get? What can we not get? How do we qualify for bigger funding as we grow our business? And finally was able to secure that money and grow that business. And then one thing led to another where other people asked me for help. And then that started to become, wow, I saw this demand, this niche where startups need access to capital and funding. And if I could, help them out with that, that could actually be, the business and entrepreneurship opportunity I was looking for. And fast forward a decade later and hundreds of millions of dollars and thousands of entrepreneurs we've been able to serve, and probably 100,000 jobs created from the funding that we've secured for clients. And we realized, boy, it's an amazing spot to be able to serve those entrepreneurs, because as you explained at the beginning, they will create the products, services, and most of the jobs that improve our lives.
Perfect. Awesome. So let's just jump into it. For example, what are the types of funding? Is it through, like, for example, credit cards, unsecured loans? What kind of loans are they really?
Great question. So what we wanted to do, and I had to be able to look people in the eye and tell them two things. Number one, that I will get you the very best funding that you qualify for. And number two, that exists on the marketplace. Sometimes we have this idea that, we got that 3 or 4% interest rate on our mortgage, and we think,
Mhm.
why can't I get that to start my business? And it doesn't work like that, because businesses are inherently higher risk than consumers are. And when you're talking about unsecured funding, which is what 90% of business owners need, they don't always have, that free and clear piece of real estate that can be collateral. They don't have an old 401k maybe that can be collateral. And so they need unsecured, no collateral funding. So for a startup that's looking for funding, you can start at the top with SBA 7A, and you generally are going to need a 10 to 25% down payment. Most of it's going to need to be collateralized by some equipment or real estate, something like that. Most of the time it's equipment. And you're going to need to have experience in the industry, and really maybe 5 to 10% of people will qualify for that SBA 7A option. So that means 90% of us need to find additional alternate financing and funding means. And that will come in two forms primarily.
Mhm.
Number one, it will come in the form of unsecured, no collateral personal loans. And you could qualify for a personal loan with a 650 credit score and verifiable income. So it's actually important as a new business owner not to quit that day job that you have, because the verifiable income from your pay stubs and the day job will allow you to get loans up to $100,000, rates as low as 6.9%, no collateral required, that you can use to launch or start or grow a business or pay down debts or whatever you need to do. And then the next product that's oftentimes used, that again, you don't have to come up with a bunch of business financials and collateral, will be those revolving business and personal credit cards at a 0% interest rate. And there's an art form and a science to actually being able to secure multiple 0% interest credit card approvals and knowing how to access those with cash, put them in your bank account while maintaining that 0% interest rate. And some of our sources will offer a 0% interest rate for as long as 20 months. And the payments are very, very affordable. And so that's kind of what's available, on the startup side.
Yeah, it definitely, it sounds like there's a lot people could do, right? And they both have different reasons. The unsecured personal loan, the revolving credit card. So what are the typical, for example, let's say with the option one, unsecured personal loan, 650 better, 650 or better credit score, interest rates. What are the terms, like for example, like what would they have to pay it back, assuming they've let's just say, for example, they have the loan out for, a year. When do they have to pay that back?
Great question. So with the personal loans, a typical loan example might be a $20,000 loan with a 5-year term, and the monthly payment's going to be around $450 a month. So it's almost like a car loan, except you didn't have to put the car up as collateral. You get all 20,000 deposited right to your bank account, and an affordable monthly payment that you would repay over a period of 5 years. However, there's no prepayment penalty, so you can pay it off early and avoid a lot of the interest as your business grows.
Absolutely. Yeah, definitely. And could you then, do you help clients then like scale? Like, for example, like we do 20,000, that works. Then we turn around and try to do like 30,000 and then that works. And then kind of climbing the ladder.
We do. And a lot of what we'll do is we'll look to stack up funding options for a new business owner, where you might look at some personal loans, you might look at some 0% interest business credit cards.
Mhm.
And together with both of those options, you can get the amount of funding that you need to get your business off the ground. And then as you grow, now your business is going to qualify for even additional products based off of your business bank statements and how will you take care of those and the sales. After just 6 months of having business bank statements and deposits of at least $5,000 to $10,000 a month, now that opens the door up to additional business loans. And then once you have an actual business tax return that hopefully shows some profits, that's going to open the door up to even more, options and business term loans as long as 5 years with affordable monthly payments as well. So a lot of the key for the business owner is you don't have all the time and expertise and resources to try and figure out all the different funding options. You are busy enough trying to focus on generating customers, clients, and building out your products and services. And so that's why it's so helpful to have an advocate, a funding advocate, if you will, who knows the landscape of the funding options and can get you the best options without you wasting your time. Because the biggest problem a lot of business owners will have is you go to the wrong lenders who won't approve you, and now you've got hard credit inquiries on your credit, and now that takes away your opportunity to get funding for the next 6 to 12 months, because lenders will assume that you already got funding based off of your credit inquiries, and if you didn't, then they'll assume they don't want to lend to you in the first place, and they'll automatically decline you.
Yeah, it's so tricky how they think that way, thinking like a bank. They see that hard inquiry exactly. And I've actually come across those same problems too, where like I was put in a situation where I had like a 0% credit interest credit card for like 12 months. And then after that, it went up to like I think 16%. So I had these huge monthly payments now, and I was trying to refinance it through other 0% credit cards. But then when I went to go do those inquiries, they were like, why do you have this other outstanding, credit card? It was a business credit card that was personally guaranteed, but didn't show up on my personal credit report. Why is that?
And that's a great question. And so, as you build the business's credit, you want to try and get as much funding in the name of the business, including some of those 0% interest business credit cards. And there are some that will still report to personal credit. They won't build your business credit, but most, if you go to the right ones, will report to business credit, and they will, help your business credit out. However, one of the banks, you're talking about thinking like a bank, and one of the big keys that banks utilize in making, approval decisions is how you utilize those revolving credit card or lines of credit accounts. And what they are looking for is they want to see that you're paying those balances down below 45-50% of the limit, because when they see it maxed out or at 70 to 80% of the limit, now your credit score goes down, your business credit score goes down, and they just think you're one, bad month away from defaulting.
Mhm.
And so they want to see, that's one of the keys. Before you go apply, you want to try and pay those balances down. And that's where getting some of these loans can come in handy, because you can go get a loan, pay those credit card balances down. Now your credit score goes up 30 or 40 points. And now you can actually qualify for new 0% interest accounts that you can use to, pay off the high interest. And that's a lot of what we do for our entrepreneurs and clients is, yes, let's get the funding for your business, but let's take this expensive debt and move it over to 0% interest. Let's boost your credit score. Let's put you in a better position as you grow this business.
Got it. That makes a lot of sense. So it's not like one option over the other. It's like different options at different times for different situations. So we'll use, for example, this type to pay down this loan, refinance it, get a different kind. So, and this is exactly how you said, this is where an advocate comes in, somebody that could help you do this. Now, do you personally help clients do this? Are you like their consultant when it comes to this?
Absolutely. We only get paid upon successfully securing funding for the client. So we're going to be your funding consultant throughout the entire process. We're going to get you that free pre-approval. It's not going to hurt your credit. We partnered up with Experian. Once we have the pre-approval, we go through income documents, look at all of your options. Here's all of the options available for you, Bob. You're in the driver's seat to decide what's best. But oftentimes it'll be a multiple step process where let's get a loan. You can use some for your business. Let's use the rest to pay down these credit card balances by X amount. Great. We just confirmed your credit score went up 40 points. We've seen it go up as much as 100 points. Now you can qualify for another $50,000 at 0% interest for as long as 20 months. Perfect. Let's go ahead and get that money done. And oh, great. And you need to get some cash in the bank account. We actually will help you pull out cash off these cards, maintain that 0% interest rate. Most people have no idea how to do that. And now you can grow your business. And oh, by the way, make sure you use these two accounts because they're going to give you cash back rewards and points so you can take your family to Disney World for free like I just did 2 weeks ago.
Wonderful. That makes a lot of sense. Who are some of your typical clients? Like, who are you working with usually?
We work with a lot of the hot niches out there. So a lot of those are online businesses. A lot of those are e-commerce businesses. Of course, we've seen the advancement, acceleration of e-commerce businesses really get to the next level over the last 18 months with the pandemic. And that's only made e-commerce that much more hot. So doesn't matter what field or industry it's in, e-commerce is a big factor, whether it's an Amazon, Shopify. We're seeing a lot of new Walmart stores pop up, and all of these businesses need money for inventory. And so that's where we'll help them out with funding. There's a lot of real estate investors. And then there's, of course, just people who are starting unique businesses, maybe brick and mortar, maybe in an auto repair, whatever it is, and we'll help them out as well. But certainly the hottest niches that we fund a lot of businesses for are going to be e-commerce, real estate investors, and online businesses and digital marketing agencies. And anybody who works with a business owner too. We'll build a lot of strategic relationships. Maybe you already work with business owners and you've got trainings and products and services. And if you had funding options that you could offer, it would allow you to help more clients and make a big difference that way. And so a lot of our business model is how can we work with more strategic partners who already work with business owners and serve them so that they can help their clients out.
Yeah, absolutely. And when you just said strategic partners, this is how, when I was on your show, we talked about infinite banking and bank on yourself and being able to leverage, whole life insurance for loans. And a lot of our clients, again, it's not one option over the other. A lot of our clients also have different ways of financing. So for example, they'll take a home equity line of credit, use that to pay down premiums or other loans on the life insurance policy. What they're doing is they're combining different sources of financing. And there's no really like one way to do it. Everybody has their own unique ways to do it. When you work with advocates like us, we show you how to do it based on your specific situation. So yeah, I like that. I like the strategic partnership side. And I think they go hand in hand at certain times for certain clients, Do you have any clients who are like financial services professionals or insurance agents who, for example, one of the biggest expenses for insurance agents and financial services reps are buying leads, like getting new customers and buying leads. So that would be a good source of financing for that. Do you have any clients that do that?
When it's a business owner who's looking to grow, and certainly we've helped a lot in financial service, whether that's insurance agents or that's financial planners. And like you pointed out, like the lifeblood of every business is how can I generate more clients and help more people, more customers? And that all comes down to marketing, and that all comes back to investments in websites and sales funnels and advertising on Facebook and YouTube and Google, and knowing where your customer's at. And so having lines of credit that you can tap into for advertising, especially the 0% interest rate, is so helpful. And it really can add up to a lot of cash points. Like if you're using your bank account, as a financial advisor to kind of cover all of your marketing costs, that's not very effective. If you're using a business card that generates a bunch of commissions
Mhm.
and cash back, that's how you're going to want to do that. And so we see a lot of those types of clients.
Okay, nice. That's what I was asking in my situation. That's one of the biggest. I have the podcast and other ways of getting new clients and helping new people. So that could be potentially, an area to look at. And then just to kind of walk us through. So, for example, a client reaches out to you, or actually, can you explain to us, like from the time a client reaches out to you to the time they get financing, how does that look, like a timeline?
Yeah, so the client will generally fill out a 90-second form that will get us a soft pull credit snapshot with our relationship with Experian. We don't even need their social security number. Once we can get them a pre-approval based off of credit, let's say there's credit issues. Well, no problem. We have a sister company that can do some credit repair for you and get that credit where it needs to be. But then maybe you've got business bank statements. We'll look at those and qualify you off of those. We'll look at personal income. Maybe you've got a partner, spouse who has some W-2 income, and we can leverage that to get funding for your business. So we'll look at that. We'll look at business tax returns, business financials, and then within usually the same day, we'll have a pre-approval. And then once you're good to go, you can pull the trigger, sign our funding agreement and application, and have funds generally within a week.
Perfect. Okay. And then do you have a process where you're circling back every like 6 months or every year and like trying to figure out ways to like, or do the clients have to do that on their end? They reach out to you and say, hey, this is working. Can I get more funding? Can I keep scaling this? Can I keep climbing this ladder?
Yeah, no, absolutely. We want to be able to provide funding options for them at the beginning and as they scale and grow that business. And they'll open up different doors. We just connected up with a new Amazon lender that just got $100 million in funding that they're going to be lending out to businesses who are well established with Amazon. And so we've got thousands of those clients that have built Amazon businesses, and now they're going to take the next step and need even more money to grow their inventory. And so absolutely, we'll follow up. We've got an email newsletter we send out. We've got a funding challenge that we run every few months as well. And so we definitely want to build a relationship, with the client to be able to help them from their early stages startup all the way as they grow and become more established. Some of the times you'll need money for equipment. Sometimes you'll need funding for commercial real estate purchases. Maybe you want to buy a building, whatever the case is. I mean, we'll look at all those options as you grow.
Got it. Okay. Yeah, I see that. That makes a lot of sense. Do you have any resources you could share with the audience, that things that they could like look up and like figure out ways to, to learn more about this?
Yeah, no, absolutely. Everybody can go to sevenfiguresfunding.com. That's the digit sevenfiguresfunding.com. We've got case studies. There's also different podcasts you can listen to on our website. We were recently on the Entrepreneurs on Fire podcast that has about 1 million entrepreneurs that listen to it every single month. And that podcast really can kind of break down how the process works and answer a lot of your questions. But the website has case studies. We also, if you Google Seven Figures Funding, we have about 500 five-star reviews and video reviews from clients. And that's always important to be able to get feedback from real experiences from clients.
Yeah, absolutely. I love it. So it's sevenfiguresfunding.com. The podcast is there. Google Seven Figures Funding. Perfect. Okay. And then you're on LinkedIn too, right?
Yeah, absolutely. We're on LinkedIn, Seven Figures Funding, myself, Leo Kanell. And usually with every client that applies, there's two things you're going to get for free. You're going to get a digital copy of my book, The Business Funding Formula, and you're also going to get access to our credit college platform that we sell for as high as $500, but it'll actually break down and unpack how your credit score is calculated. Most people think, if I make my payments on time, I'm good to go. And that actually only makes up 35% of your credit score. And the sad thing is, Sari, that in our schools, in college and high school, I didn't learn anything about credit and money. My kids still aren't either. My oldest is going to the university here in the next year. And I feel like it's on us as entrepreneurs to help get that credit education out.
Absolutely, you're right. I wish they would just like at least provide the options, like especially in high school, for the kid, this is a credit card, this is a loan, this is instead we have to take classes like humanities and art history and things like that, things that probably won't benefit us. But yeah, I agree with you. I think there definitely needs to be more education, and not so much complex finance, right? But just the basic stuff. This is interest, this is what happens, this is why you would want to take out a loan, this is things like just to kind of get students at a young age thinking like this, thinking like a bank at a younger age. I think a lot of people who know about debt are usually, when they get into debt, that's how they actually like explore it and find out more about it. They're calling banks and, oh, you can't do that, you could do this. That's their experience, that's their exposure to loans, is when they're actually in debt. Leo, it's been wonderful having you on. I look forward to bring you back on the show for another episode, probably come back on your show. I think we could collaborate a lot of the same content. As mentioned, this is a fascinating subject. Thank you so much for joining us. Any final words for the audience before you go?
Yeah, you want to get your money right as an entrepreneur and a business owner. You need to treat it like a game. Like, you have to understand how to win. You have to understand funding and financing enough, not enough to understand all the details and nuances, but enough to be dangerous so you can make good decisions. And then understand the difference between personal and business debt. If you're using money for personal reasons that don't make you money, that's the bad debt that Dave Ramsey talks about. The good debt is when Kevin Plank takes out $40,000 in credit cards, invests it into Under Armour and his product, and now has a multi-billion-dollar company. Mm-hmm. And so it's understanding how to use financing and how to use funding, because you can't be afraid of it on the one hand, but you got to understand where it should be utilized on the other.
100% true. Yeah. Big difference between good debt and bad debt. And exactly like you perfectly said, one of them is just hurts you. Another one helps you scale and grow. Yeah. Thank you so much, Leo, for joining us. I look forward to talking to you again.
All right. Thanks so much, Sari.
To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.